Pepsi shares are losing their fizz today. Is it time to buy the dip? Welcome to today's Equity Empire chart analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, I'm going to be taking a look at Pepsi shares in the Pepsi chart. And the reason I'm looking at Pepsi is because Pepsi shares dropped almost 7 points today, or nearly 5%. And the reason they dropped was because Pepsi missed their quarterly Wall Street analyst expectations. Pepsi reported revenues of almost $18 billion, but that was down about 2% from a year ago. And they missed slightly on their earnings per share versus Wall Street expectations. But even more importantly, Pepsi said that they expect no profit growth this year when previously they had expected mid to single digit percentage growth in profits. So that's the reason the stock is dropping. Is that providing us with a buying opportunity? Well, we will consider two factors of whether that's a buying opportunity, because if you simply just bought every dip, every time Pepsi dipped in the last several years, if you bought that dip, you bought that dip, you bought that dip, or if you bought that dip, almost all dip buyers in Pepsi are now sitting on major losses. So we're not just going to buy any dip. We're going to have a clearly defined process to buy the dip. And there's two ways to assess or to buy the dip more like a pro rather than just buying any dip. And one way is using fundamental analysis. And on our Equity Empire Substack website page, I laid out Warren Buffett's 5-step process for buying a dip. And if you want to buy the dip using fundamental analysis like Warren Buffett does, you can go to this page and look at the steps for how to buy the dip on a fundamental basis. 5 simple steps. That can be a lot of work when actually all you really need to do is look for clues in the charts to where the big money is buying the dip. So instead of trying to become a Wall Street analyst and employ all those factors, all those fundamental factors, they're going to show up in the chart, folks, because the big money is going to provide clues in the charts as to where they're stacked up trying to buy or trying to sell. So let's go see if we can see a little of those clues. Where's the big money most likely looking to buy the dip? And there's a pretty strong clue right here in the 134 to 126 price range. So after the COVID dip or the COVID crash actually, in March of 2020, Pepsi shares found support several times in this price range, 134 to 126. And interestingly, that's exactly the price range that we're approaching today. So maybe that is a clue. If you want to buy Pepsi shares and buy them in a price range where it looks like the big funds are stacked up trying to buy, we're actually getting to that kind of support level right now. Now, if you're looking for an even greater discount or a lower support level, waiting patiently to buy at an extremely low price, you might consider this support level right here in the 103 to 95 price range, which was established in 2018. We bounced off it twice in 2018, and we bounced off it resoundingly in the COVID crash of March of 2020. Will Pepsi get to 103? Well, it may never get to 103. You might have to wait a long time for it to get to that support level. But we are quickly approaching. We are just in front of this support level here in the 134, 126 price range. So if you're looking to buy the dip like a pro, it looks like the big funds might be stacked up trying to buy it near current prices. So we might see a bounce soon off of this price level. Alrighty, let's wrap up today's session. If you're new to trading or investing, hope you learned something from this. If you are more experienced as a trader or investor, maybe I was able to provide a support level that you hadn't considered in the past. I will be, every day going forward, I will be taking a look at a different chart on a different stock, looking for the same kind of institutional price ranges where they're stacked up trying to buy and trying to sell, and also assessing the near-term and intermediate-term trends. In the meantime, I wish you the best in your trading and investing, and we'll see you soon.